Hello, everyone. It's that time of the year, tax time. So I thought I'd share some little tax information with you as it relates to real estate. Thank you all for tuning in. Just a little disclosure, I am not a CPA nor an accountant, just sharing information based on experience and based on what licensed certified professionals share with me. Everything that I share with you is just information that you could share and discuss with your tax accountant. So by this time of the year, you will have likely already received a real property tax statement from the county that you live in. This is for your property taxes. If you currently do have a mortgage, it's likely that your property taxes are included in your escrow and paid by your mortgage company, unless, of course, you are a person that likes to pay your tax burden outside of your mortgage payment and you pay that annually. Or if you don't have a mortgage, you've already paid off your mortgage, then you would also need to make payment for this tax statement. But I make mention of this because I had a few clients this year already called. These are new home buyers that have purchased last year, and they're curious if they have to pay a tax burden. And I let them know, hey, take a breath. This is included in your mortgage payment, so you don't have to worry about it. So remember, PITI, principal, interest, taxes, and insurance. This is the taxes component of that. Take this to your tax provider, though, so they can see what the annual tax is. So in 2021, I would need to get the statement for last year to take from my tax provider. However, that information will also be included in the statement that you get from your mortgage provider, which I'll talk about next, or shortly here, not next. If you purchased a home last year, you will likely have seen a purchaser settlement statement. This settlement statement could be referenced by your tax prep person to look for items that they could use as deductions for your taxes. So some example, like recording fees from your title company, maybe you paid a transfer tax, maybe you paid for your owner's title insurance. Nonetheless, take your purchaser's settlement statement to your tax provider and they can reference it, pulling out some things that may be some deductions for you to claim on your taxes. The next one is your 1098 mortgage statement, interest statement. The key things that are included on this, again, this is a 1098 form. It'll say up in the upper right, mortgage interest statement, form 1098. Your tax prep person will look for mortgage interest paid. So this is what you paid toward the buyer. Here it says mortgage interest received because it's from the lender's perspective. They'll also get your real estate taxes paid. So this should be the same number that is included on your tax statement that you received from your county. Again, form 1098 mortgage interest statement. The next one would be form 1099. This you would receive if you sold a property, and the key thing at your tax professional is going to get your gross proceeds, depending on how you filed your taxes, depending on the basis that was noted when you purchased the property. So example, if I purchased the property at 300,000 and it appreciated, and now my proceeds were 365,000, maybe that 65,000. If I lived in the home as my primary residence, it's likely that I would not have to pay any capital gains. If it was a rental property, it's likely that I would have to pay capital gains. Again, you need to address these questions with your tax professional, but I just wanted to go over each of these key documents with you, each of these key forms with you, so that way that you're versed when you talk to your tax professionals. If you have any questions that I can answer for you related to real estate, please do feel free to reach out. My contact information is included on this page, and I hope you have a very prosperous new year.